This video is something I thought really careful about making because it's actually something that could hurt my brand, but I want to be honest and transparent with you guys, so I'm still going to make it. So I'm going to talk about prop firms today and how you guys should navigate this space, this game. I have a lot of experience with different prop firms, and I can tell you that there are a lot of factors that you need to consider, and I'm going to tell you some uncomfortable truths that you have to actually think about in this game. So the truth is, when you're doing bad, these prop firms are making a lot of money, as we all did. We blew challenges, bought another one, blew it the same day, the same session, but then we start to get better slowly, and we're getting some payouts. And what I think a lot of you guys probably have noticed, that when you got your first small payouts, let's say on a 10K account, let's say you made like $300-400, a lot of times you didn't have necessarily good risk management, but these prop firms didn't care at all about denying your payout, because for them a 3-4% payout on a 10K account is actually nothing. So they don't even care if you had good risk management, or obviously if you breach some of their clear rules. If you trade on red news events, they're obviously not going to give you that payout, but other than that, they're not going to go in manually and look, okay, how did he have risk management here? Like, it's not going to happen. It's just automated bots who look at if you traded on red news events, a lot of that stuff. But once you get into that area where you start making bigger payouts, 100K, 200K, 400K payouts, that's actually when things start to get a bit tricky. Because these prop firms, as convenient as they are, you have to realize that they have a business model as well. The best win-win scenario is when we make money and they make money. So obviously we have to respect the rules, and we have to respect that they also run a business, and we want a win-win relationships where we make profits and they can also run a business profitably and make profits. That's the perfect scenario. But what do you think happens when one of these, either us or them, are a threat to each other, where if they deny too many of our payouts, it's not going to be profitable for us? But if we start making too much money, if we start getting too profitable, it's not profitable for them. So if you were in their shoes, you would probably not like that to happen either. But there's a fine line between denying some payouts that are too crazy or too over leveraged, I guess, or setting some rules that protects them in a way, versus actually just flat out being unreasonable and denying payouts, because that's actually fraud. Because think about how many challenges you have blown in order to get to that point, and if they then just start denying your payouts as soon as you get profitable, that is a scam, and that's something I have no respect for. I'm not going to call out any prop firms here in this video, but I can tell you from experience that some prop firms, they don't want you to win, and they do so in a lot of different ways. And obviously one of the most obvious ways is denying payouts, and I'm going to talk about how you can avoid that from happening. But I'm going to talk about some more subtle reasons or subtle tricks they play in order to keep you unprofitable without you even realizing it. And that's actually the worst thing, because that's something you can't even see or notice. It's just happening, and you're getting manipulated into staying unprofitable. So first, I'm going to talk about how you can avoid getting payout denied. The truth is, these prop firms have a lot of money, even like at least the big ones. So if you request a 3K payout once a month, or you make 3K a month, that's nothing for these firms. So that in itself shouldn't be an issue, and they're not going to be that, I would say, strict on these kind of payouts. And if they did, they also know that people wouldn't trust them. They have to be trustworthy. It's more when you get to that point where you're making like 20-30K a month, that's actually when things are getting a bit more tricky. that's actually when they start denying their payouts, because they know how to do that as well. They can be like, you risked a bit more than 1%, let's say spread slippage, you risked 1.3, 1.4, 1.5. They can actually deny your payouts if they want to be difficult. So especially when you get to that level, and I know I'm only talking to like 1% of my viewers at this point, because like that's a high level, but I know a lot of you guys watching are going to get to that level soon, sooner than you realize. I know it feels impossible now, but you're going to get to that point. That's when you have to sit down and think, okay, I know that I have to stay under the radar. I have to not get noticed. It's like, compared to robbing a bank, you don't want to trigger the alarm like too quickly or too aggressively. So you have to be more chill, more careful. If you trade that big of an amount, you have to make sure 100% that you don't risk more than 1%. Maybe you have to lower your lot size a bit just to avoid that from happening. And maybe you have to not request the full payout. Like if you make 20k or 30k, maybe like don't request everything like that. Like just chill, request a bit. Your goal is to get something out of the market and get that live money in your bank account. And if you know what you're doing, you shouldn't blow the account either way. But that's actually when you get to that point where you realize the power of personal capital, at that point when you get to that 20k, 30k a month, because prop firms are not going to let you scale up your account even if you make that much. If you want to risk more per trade, they're not going to do so, even if you're risking the profits you've made before withdrawing them. So, and I'm not blaming prop firms for this at all. If you want to scale that aggressively, you should build your own capital. Like, prop firms aren't meant for that. They're just a tool, and these firms don't owe you the ability to risk, like, let's say you want to risk 2, 3, 4, 5% per trade, even if it's from your profits. Like, they don't owe you that. Like, they're giving you capital that you wouldn't have, but sooner or later it's your job to extract that capital as much as they are going to let you withdraw, and build your personal account. Because if you do the math, the scaling process is insane. The compounding effect on a personal account is actually insane. Like, it could actually make you a billionaire if you know what you're doing. But most of us are going to withdraw that money from the personal account before becoming a billionaire, because let's just be honest, like so other subtle tricks they're doing. But before I get into that, I want to talk about that if you are a serious trader and if you have a strategy, then we all know that the best trading backtesting platform is FX Replay. And if you use the code HOYER15, is linked in the description as well, you get 15% off your monthly subscription of FX Replay. That's a platform I use myself. I'm not promoting anything that I'm not using myself, and I'm not trusting myself. Everything I'm promoting is something I'm currently using myself and that I trust. I'm not going to sit here and promote something that I don't like. So if you're interested in that, there's a link in the bio. And if you're interested in my trading strategy, how I trade profitably, and my live market analysis, Monday to Friday, London session, New York session, not Asia session yet, but maybe someday we'll get to Asia session as well. Sorry. So subtle tricks that these firms are playing on you. The first one is, I've been actually associated with a firm that, or not associated, I traded a challenge for a firm a while ago. It's a long time ago, and I'm not going to call them out. I don't care. Like, they can do whatever they want. But they actually lowered the lot size you could make. Like, they lowered the lot size you could trade, and I tried to contact them and ask what's happening to the lot size, but they were like, what do you mean? Like, they couldn't answer me. And then suddenly, like 2-3 weeks later, they fixed it and there was no notice. But at that point, they already screwed up my psychology. So I basically had already lost the account at that point, because like that's not something that, like, I couldn't even risk 1% per trade. I had to risk less. So just like that in itself just screwed up my psychology. And I just noticed, like, you notice quickly when firms don't want you to win. And other things they may not, like, they may do that it's not necessarily something they're doing to make you unprofitable, but you always have to think about, like, all these firms that are, like, they're teasing you with this, like, scale your account, if you complete this step, like, after getting funded, if you get these and these payouts, so many percent, like, all that stuff, like, you could scale your account, you could get more accounts, like, all of that stuff. It's not necessarily something they're doing to hurt your progress. It's actually a really good offer, but you have to consider how you think about that. Because if you already, like, if you treat this like, okay, I passed the challenge phase, the evaluation phase, and now I'm funded, but then you push yourself to get, like, instead of, like, getting, let's say you get a 3% payout, but you know that if you get 8%, you scale your account, like, then you're not satisfied with those 3%, and you always aim bigger. And that's also something in challenges where you're this close, you're like 0.2 0.3% away from completing the challenge, but your trade hit TP. Then a lot of people, including myself, like, we've been like, but let's just see if it runs a bit lower to complete the challenge. But it's not logical. You're not trading your plan, you're trading your emotions. And I know people that have been like 0.1% away from completing the challenge, 10% phase, whatever, 8% phase, and then they couldn't just close the trade and wait for the next, so everything ran against them and they started losing money. That's the power of not trading your plan, trading your account. And I could go on and on, but the thing is, if you realize that you're starting to perform well, and then you realize that some of these firms are actually trying to keep you down, that's a big red flag. If you get that feeling, if they're hyping you up, and if they're, like, not trying to be difficult, that's actually firms that want to see you win. If they are getting difficult, that's actually people that just want to keep you down. So that's it for this video. Always do your own research. If you're interested in my recommendations, which prop firms I personally like, then I could absolutely tell you that as well. And I'm associated with the firm I'm currently using the most, which is my favorite firm. But I'm keeping this video neutral and I'm not going to call out anyone. So if you're interested, just send me a DM and I'll give you recommendations from there. Thank you guys for watching, and see you soon.